All right. Okay, good day, everyone. Welcome to History, Grade 11. Today we will be, before I continue, we just need to add one more person. Just give me a minute. Just give me a minute. Okay, there we go. Hello, Bongi, can you hear us? Hello, Bongi. Hi, can you hear us?
Yeah, I can hear you guys.
All right. Okay, we've just started with the lesson. Can everybody see the screen? The PowerPoint presentation?
Yeah.
Okay. Awesome. All right. Can everybody still see it now? Okay, so yes, welcome to history. Our topic today will be the crash of Wall Street of 1929. All right, guys, so before we start, I just want to ask a quick question for discussion. What is the Wall Street crash of 1929, as well as what is the Great Depression? I don't expect each of you to know exactly what it is, but I don't know if maybe you've heard of it before. If any of you can sort of just tell me what you think it is. Elwa?
Okay, I think I'll try with the Great Depression.
Mm-hmm.
I think the Great Depression was when the USA was kind of like experiencing economic meltdown.
Mm-hmm.
Yeah, so I think that's what I've heard or read somewhere.
Okay, Umpi,
Yeah.
do you have anything to add to that? No, not at all.
No,
Okay,
ma'am.
okay, that's okay. Bongi, do you have anything to add on that?
I think the Wall Street crash. I think it was wasn't it when there was like that stock crash? I think
Yes.
yeah, when the stock crashed and like people lost their money and like banks I think closed as well. And then the Great Depression. Oh, like I have an idea of it, but like I don't know like it exactly. Like I can't remember from history. But yeah, the Great Depression it happened like in like 19 something I think.
All right.
And
Okay, no. You'll find out soon. Don't worry.
oh, okay,
Thank you so
yeah.
much. That was very brave of you. All right, guys, just to quick start the lesson, I just want to introduce the Wall Street crash to you guys for the first 5 minutes. Please just let me know if you can hear the video. Can you?
Yeah, we can hear you.
Alrighty. Okay, let me just give you guys some time to sort of look at it.
I can't see the video anymore now.
Elwa, sorry?
I'm still seeing the discussion time.
You're no longer seeing the video. Umpit, can you see the video?
So
You can't see the video. Okay, let me just start there. Can you guys see the video now?
There you go.
yes.
Okay, sorted.
Yeah.
Okay, let's go. I think we were somewhere, yeah. All right. Did everybody get that?
Nope.
No? I gotta know. Who said no?
I can't see anything.
What do you mean you couldn't see the whole video? Ella, did you see the
Yeah.
video?
I can't
Yeah, I did.
see.
Bongi?
I did.
All right, Umpi, I'm very sorry because you should have said that you couldn't see the video before we started.
I think it's my network, so I
Oh,
don't know because I can't see anything. I can't see you. I can't see.
the lesson as well.
Yeah.
Okay, so you fortunately have the content. So I'm just gonna go through the content. So just try to listen in, okay?
Okay.
All righty. Right. Bongi and Ella, can you see the first screen there?
Yeah.
Yeah.
All right.
No.
So when we are speaking about the Wall Street crash, obviously the first thing we need to look into. Umpi, can you maybe switch off your mic? All right, can everybody switch off their mics now? Thank you so much. All right, so what was Wall Street? Sorry guys. Let me just make it bigger. There we go. Can everybody still see? Thank you so much, guys. All right, so Wall Street, we see on the left, we see a 1929 illustration of Wall Street, which is what we'll be discussing today or dealing with. And then on the right, we have the 2019, which is today's depiction of Wall Street. So basically, Wall Street is, and I'm sure you've heard of the term from movies. It's an 8-block street which is located in Manhattan, New York. What happens is it's just a long line of financial and trading companies. We have men and women who trade stock. We have financial companies. It holds one of the nation, if not the world's biggest financial companies. Right? If you have any questions on that, please just raise your hand or unmute your mic. All right. Okay. So the Roaring Twenties. After World War One, we have. Did we lose Umbe? Okay. Let me just add another student in. All right. We have Chido. All right. Hi Chido, we've already started the lesson. Thank you for switching off your mic. Today's topic is the Wall Street of 1929. All right, so now we are speaking of the Roaring Twenties. After the First World War, the 1920s, also known as the Roaring Twenties, were a time of economic boom and growth in the United States. All right, have any of you watched the movie The Great Gatsby? All right, Bungi, do you maybe want to tell me about the lifestyle of The Great Gatsby?
It was very like extravagant, like there was lots of like luxury and what's it like? Yeah, it was very fancy stuff and like parties all the time. Like they're always going to parties and events and like with people who had money and cars, like cars at the time.
Good. All right, thank you. So the reason for that was because it was a huge time for industrialization in the USA during the 1920s. So what was happening is that new technologies were emerging. We're getting cars, we're getting telephones, we're getting radios. New banks and companies were growing, so people were just buying things. They were selling things. There was a lot of money coming in and going out, and so people wanted effective ways to save their money and to secure a more profitable return. So rather than just keeping their savings in their bank accounts, they chose to invest in their stock. What this caused is speculation. Before we go to the next slide, knowing the root word speculation, not necessarily linking it to what we're speaking about, what do you think speculation means in general? Elwa?
Speculating.
Yeah, just speculating in general on a day-to-day basis. What do you think speculating is?
Not. I don't know how to explain it, but I think It's kind of similar to an assumption.
Good, good. That's very
Yeah.
good. Good.
Yeah.
So what happened with speculating is that during the time of when the economy was booming, um, stocks were at a high price. So stocks were in high demand, stocks were at a high price. So people would often invest because from the investments, they received high returns because obviously the economy was doing so great. So um, they speculated that, sorry, that should they invest in stocks, their return on investment would obviously be high. So speculation happened is when people thought, because now the prices for stock are increasing, they speculated that they would always get a high return on investment, they would always get high profits. So what they did here is that they would risk all of their salaries, they would risk all of their savings, all of their wages into stock, not thinking that okay, there might be a crash, there might be the economy falling. So they took these big risks because they saw that in this time that we're living in, the more we invest in stock, the more it looks like we're going to get a huge return on our investment. Does everybody understand that?
Can I also add something? Oh,
Yes, you
I
can.
remember that also like people also include like a lot of debts. I think what also contributed to the stock crash is that
Yes,
people
yes.
were taking out credit as well. So like taking out
Mm-hmm.
loans at the bank, whatever, to invest in the stock exchange.
Mm.
And so people were also like relying a lot on credit. So like money that
Yes.
they didn't.
Good, 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 good. We're actually going to discuss that with buying on margin. It's called buying on margin. I don't know if you can maybe see it on the last column on the table that I'm showing you now. Can you see that, Bongi? Buying on margin.
No,
Can you guys see the causes of Wall Street?
no, we're still on
Okay.
slide 4.
Yeah. Okay.
Okay, now we can see.
All
Yeah.
right, I think I shouldn't just make it bigger. All right. So yeah, we just spoke about speculation now. I didn't realize that you guys didn't see the part on speculation. So we just had that discussion now. And then we had the causes. So now we are on the causes of the Wall Street crash and something that Bongi said, buying on margin. Can you now see it in the fifth column of the table? Yes. Bongi, yes. So buying on margin sort of just refers to what Bongi said. Very, very good. That was very good. It sort of just refers to borrowing money from the bank, borrowing money from stockbrokers in order to invest on stock. Do you understand? So just to sort of further this with you, Bongi, what do you think are the consequences of sort of borrowing money in order to invest in stock? What do you think are the things that may go wrong with that?
I think that if everybody is buying on credit,
Mm,
like there's actually like like nobody's gonna be able to pay back those banks the money.
good,
Like
yeah.
yeah, for those things that they bought on credit. And
Mm,
also if the stock doesn't since they're investing in the stock so that they can get a high return, if they
mm-hmm,
don't get a high return, that also leads to the stock crashing. And there's
mm-hmm.
also obviously the money in the economy, it isn't
Yes,
really like being sustainable.
good, good. So what does that mean for the banks then?
The banks, I think the banks like eventually have to like close
Mm-hmm,
because like
mm-hmm.
no one's paying back the money and like they
Good,
aren't getting a return on their investment and
good.
stuff like this.
Yes, that's very, very good. All right. Ella, do you have maybe questions on that? All
No,
right.
thanks.
Okay, no problem. All right, so now we're just going into the causes of the Wall Street crash. We've already spoken about the last one, the buying on margin. All right, so the first cause, one of the first, might I add, is just that they avoided the warnings. There was a stockbroker and a banker by the name of Charles Mitchell, who on the 25th of March did say that, okay, did notice a mini crash, and then he did voice it out, but everybody just ignored him and continued investing at the risk that they were. So secondly, we have easy credit. As we discussed about earlier, the roaring 20s and the great Gatsby's and industrialization and technology coming into play, Americans began to desire these cars, these new technologies. Everybody just wanted to have everything. So even those that could not afford easily bought things on installment and on credit, because like I said here, that the focus was to live now and pay later. The problem with this obviously is that it led to debt due to growing interest and growing credit interest, right? So everybody understood that. All right, so the third one is declining production and consumerism. So as the economy began to decline, these companies that used to produce these new technologies, cars and so on, production slowed down. When production slowed down, obviously purchasing slowed down, and purchasing, also known as consumerism, closes down because of the credit. Credit was harder to get. People were broke, not only because credit was harder to get, because they failed to pay their already existing credits. They're taking credit to buy things. They're also now taking credit to invest. Are we good on that one? All right, awesome. And then the second last one, as we discussed, the buy margin, is that the stock market boom speculation. We spoke of speculation. Ella, do you maybe want to remind us what I spoke about in regards to speculation when you gave me the speculation definition, and as well as when I explained the speculation definition?
Okay, what I remember is I remember that the people used to assume that or speculate that. I think you talked about having like, how do I put it?
To help you,
Oh,
they thought that maybe shares would always bring in, a lot more return on investment. So they constantly thought that they would bring more return on investment. So the speculation came in where they didn't really think about what they were investing in. They didn't think twice or look at the, what is it called, the not the probability, the I'm looking for the word, if it's legit, if something is legit, I'm looking for the word.
real?
No, another word.
Genuine?
Yeah, I think, yeah, they were looking if to see if they were not really paying attention to the legitness of the companies. So they were just constantly investing because the culture at that time was, okay, if we invest, we're going to get a return on investment. So they speculated. They, let me just say, they got too ahead of themselves in making investments without really thinking of the risks thereof. All right. Okay, thank you so much, Natasha. All right, we are now at the next slide, the timeline of the fall. Can everybody see that? All right, awesome. So, so just sort of how everything started to fall apart. In September of 1929, this is where investors, they began to notice that the economy is beginning to fall, and then they began to sell off their stocks very, very quickly. Just to make it closer to home, this is you and Natasha being a stockbroker and I being an investor. Me saying that, okay, no, the economy is falling. I'm quickly selling the my shares to Bongi so that I can maybe get a profit. you know. Exactly. And then with that profit, I'm just hoping to maybe pay the bank that I owe from the credit that I took to make the investment. So everything was just sort of falling apart. And then in October of 1929, that's when the fall of Wall Street began. Stockbrokers, they began to demand now these repayments of the credit that they gave to investors, the margin buying that we spoke with Bongi about, right? Awesome, guys. And then to stabilize the market, leading bankers and investors, they bought blocks of stock. They bought a lot of stock in attempt to sort of save the margin or save the economy. And on that day, on the 28th of October 1929 to be exact, the stock market went into a free fall and lost $5 billion. Right, and then in October 1929 as well, on the 29th, it's a very important date, it's called the the Black Tuesday. This is where the stock market completely collapses, and in a single day, between 10 to 15 billion dollars was lost, and a lot of millions and millions of Americans lost their jobs. And then in mid-November of 1929, almost $30 billion had been lost on the stock market as stock prices continued to drop. Okay. All right, I'm on the next slide. Can everybody see that? Bongi? All right, thank you guys. So what impact do you think the Wall Street crash had on the economy of the USA during that time, Bongi?
I think that it led to a lot of debt, and I think the GDP may have like declined,
Good.
and their interest rates. I think like with like I'm not sure if they really did have like the IMF and stuff at that time, but if they did, then like their borrowing rate was probably really high because they needed to obviously borrow more money because the country was in immense debt.
Good, 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 good. All right. That's really good. All right. So we're on the next slide. Can everybody see that? So just to add on to what Bongi said, when stock prices began to drop, it led to the Great Depression. There are obviously many factors that led to the Great Depression, but the Wall Street crash of 1929 was one of the main factors. All right. And then so industrial production dropped by 45% between 1929 and 1932. Obviously, there was a fall of demand in goods, which meant that productivity was reduced. If productivity is reduced, it means people are not working. So unemployment rates increased. Okay, fine. And then during the first 2 years after the Wall Street crash, over 3,000 banks went bankrupt. We also discussed this with Bongi during the margin buying discussion. Um, so 3,000 banks went bankrupt due to easy credit. And then over 20,000 companies and businesses went bankrupt and also closed. Okay. Elwa, just looking at these photographs before we get into the discussion of how the Wall Street crash impacted the society of um, the USA at that time. Can you maybe just give me an idea of what you think happened to the society and to the civilians of the USA once the Wall Street crash occurred and once the Great Depression started to take place?
Oh, okay. Clearly by these pictures, I see that the Wall Street crash led to poverty.
Yeah.
Like to a point where children were sold. Oh, yeah, yeah. The pictures depict a lot of poverty from what I see. Like from the previous slide, people have lost their jobs and like people were unemployed.
Good.
So
Okay. So what do you think the reasons behind the mother was to sell the children? What were her reasons?
okay, for one, oh, the one that I can think of is she probably wanted the children to grow up maybe in a stable home.
Good.
Yeah, I think that's one reason that pops into my head. Because clearly she was part of the people that were unemployed, part of the people that lost their jobs maybe. So she wanted
So she
her
now
kids to grow
clearly
up.
can't afford them.
Yeah.
Good. And then Bongi, what does the second picture tell you?
The second picture, I think it shows how like the way in which the people were living. It was like they were in dire situations because like they didn't have much to eat. As you can see, like there's bread, only have like one slice of bread and I think tea. And like they also looked like kind of famished and like skinny.
So there was starvation.
Yeah, there was starvation.
All right, guys. Thank you so much. That was very good. So just moving to the next slide, it basically just puts an emphasis on everything that we've discussed from the pictures. On society, there were high suicides because people were jobless. They were hungry. They were no longer as sure as they were in the beginning of the 20s. So psychologically, people moved from feeling invincible and exuberant during the roaring 20s, like I just said, to feeling more vulnerable, uncertain, and helpless. Next, people were hungry. There were no benefit system. They left people starving. And as we saw in the previous slide, there were soup kitchens, as described by Bongi as deprived. And the students were, sorry, my bad. The people were homeless. They were unable to pay their bills because they were already in credit. It became impossible to obtain credit. There were foreclosures, leaving many Americans evicted and homeless. All right, guys. So just to sort of um, summarize the lesson, does maybe one of you maybe want to give me a short summary of what caused the crash, how it impacted the economy as well as society as well, just in a short time, just for me to know that you have grasped the content of the lesson? No? Okay. All right, Ella, can you maybe just give me a summary of the economic impact?
Okay, just as like I remember from what Bongi said, that during this time, I remember that when she was talking about the banks um, losing because of people not being able to pay back the
Yes.
amount they owed, people would like close down because of bankruptcy.
All right, good.
And
Mm. All
yeah,
right. Okay. Okay.
that's what I
Oh, that's good. Thank you. Okay. And then just I'd like us to move to a quick class discussion where I'd like the both of you to participate. So just imagine that, okay, let me say now, Bongi, you are the bank. You are a bank or any type of company, and then Edward, you will be a working civilian investor, parent, or, I just want to ask Bongi first, how would it have affected you? How would the crash have affected you? And how do you think you have dealt with it as a bank or a company?
Okay. Okay, I think as a bank, it's actually kind of tough because like there's actually maybe like a lot that they could have done, but I'm not too sure. I think that maybe as a bank, because people are taking a lot of things on credit, you need to find a way to get that money back. And
Yes.
obviously, if you can't get that money back, then I think maybe they would have had to like seize properties and stuff to sell
Okay,
from
that's
the
good.
people who bought things on credit.
That's good.
And maybe they would have, what could they do as a bank?
What I think, just tell me what you maybe would have done different that the banks during this time didn't do.
Oh, I think this thing of like not having like a certain limit or like doing background checks on the people who are
They
trying
give
to
credit to.
credit,
Good, good,
because
good.
I feel like they didn't do that, and that's what led to people like thinking that they can get anything that they want, even though
Yes.
it's not like guaranteed that they can pay that money
It's
back
not
to the
in
bank.
it's not in their means.
Yeah.
That is good. That's a good answer. All right, Elwa, as a working civilian, as an investor, as a parent during that time, how do you think it would have affected you, and what have would you have done different?
I think what I would have done differently is, I mean, all of us we want like nice things, we want the new cars, we want the new
Yes,
houses, but I think it would be best for one to like think about how your pocket is, like
yes,
think about what you can afford. So instead of buying something that you can't afford and you have to get a loan for it, like save first.
yes,
As a
definitely.
parent, think, yeah, save first, and like to avoid having to pay so much interest, to avoid having to like pay something, I don't know, like, yeah, I think that's the best way to deal with it. Yeah,
So you
like
would have, so
buy
you,
things that you think you can afford
okay, all right.
and avoid, yeah.
Awesome. All right, Bungi.
I think I do agree with what Ella's saying. I think the thing of that time was that they were, I feel like they were experiencing a lot of peer pressure,
Good.
because like what, like if a person was there buying a car or having like nice furniture in their house, because it was like obviously like you said it was an industrialized time,
In
so
yes,
like yeah, there was a lot of,
industrialization.
yeah.
Mm.
So, and I feel like if one person's there buying a car and showing off, then it's like the other people also now wanna like
Buy a
get things
car.
on credit. And I think that's what led to the roaring 20s, and like why it
Mm.
was so, they had like these lavish lifestyles, even though like most of the things were probably on credit.
Yes,
Because like
yes,
it was
yes,
feeling
yes.
like peer pressure, like it's like, oh my gosh, this person's doing better than me. Oh, but like I also
Good.
feel like I can do
Yeah,
better.
because even from the Great Gatsby, we sort of see the
Mm,
gap that's there between the rich and the poor. Because you
yeah.
get movies, you get the scenes from the movies where it's extravagant and everything's gold and roaring, and then you get sort of the rural sides and it's just a mess. So
Yeah,
there's
that's
obviously a
expensive.
huge gap between rich and poor, and obviously the poor wanted to get to the side of the rich, and that's why they took the risks that they did.
Hmm.
All right, guys,
And I think that's
awesome.
also what led to the psychological things like suicide, because like they
Yeah.
got to have a taste of like that good life,
Yes.
and then
Mm,
it led so then when the crash happened and like they lost everything,
You
then
just
it's
took
like
it
I'm
home.
not about to go back to square one.
okay. All right, guys, this was a good discussion. I'm so proud of you. Okay, so now yeah, we're just gonna finish up the class with a homework exam. Sorry, my bad. The homework assignment. The allocation. So it's just basically what we spoke about today. So you can choose either to write an essay of the economic crash, the Wall Street crash of 1929, the social as well as the economic impacts, as well as how it started, or you can choose to draw up a recovery plan. It's just sort of a recovery plan is what we spoke about now, how you think they should have dealt with their finances and how you would have done things different. So you can just choose whether you write the first essay or the second one, which is a recovery plan. All right, guys. And then just to conclude, the homework assignment is due on the 4th of October 2020. Please just email them to me. And please note that I have posted extra readings as well as the same lesson, as well as the lesson, this particular lesson from another teacher, just for those of you that did not grasp my type of teaching style. It is on the shared drive. All right, guys. And then if there's anything else that you need, email me personally, or just send a message to the WhatsApp group that we share. That will be it for now. If there are any questions that you guys have on the lesson, please just share them now. Everyone's good? All right, guys. We will see each other next week. Goodbye.
Bye.